Hello and welcome to a fresh episode of Majlis and Markets. I am your host Hassan Javraj. Join us for insightful conversations with leaders in Islamic and global markets. Don't forget to like, share and subscribe. You can also reach us at hassan@majlisandmarkets.com and be sure to follow us on LinkedIn. Today, we're talking about Islamic finance in the UK. The UK is the leading hub for Islamic finance in the West. The London Stock Exchange holds 35% of the US dollar sukuk market, and English law governs most sukuk worldwide. But domestically, the industry remains small. By the end of 2023, Islamic banks made up just 0.1% of UK banking assets, according to Fitch. To explore why, we spoke to Mohammed Paracha, a key figure in the early 2000s. He helped shape the sector as part of the Bank of England's Committee on Islamic Finance. Today, he's managing partner for the Middle East at Norton Rose Fulbright and co-founder of Nesta, an FCA-regulated Islamic fintech. Mohammed Paracha, welcome to Majlis and Markets. Great to have you here.
Hi, Hassan. Thanks for inviting me and great to be talking to you and to your listeners.
Mohammed, you've got like a really interesting background. I think you're probably one of the most, I would say, probably one of the premier or like one of the most famous Islamic finance lawyers I know. You've been in this industry for a really long time and you've been involved in a lot of things in the UK and also globally as well. But before we get into like what you're doing today and your fintech and everything, could you give our listeners like your early life and your background story?
Yeah, sure. Hopefully, I won't put any of them to sleep by telling them too much about my background. I'll try to keep it brief. But like many English qualified lawyers, we kind of go through a pretty regimented academic background in that we do a sort of LLB degree at an English university, followed by what used to be known back then as a diploma of law, or the LPC, which I did at the College of Law, and sort of you become a qualified solicitor after then doing a couple of years as a trainee. So my academic background was typical UK solicitor, the sort of LLB degree followed by the diploma. I think the difference with me, however, where I sort of depart from other solicitors and lawyers was that actually for the first year of my life, I actually was not planning on becoming a city lawyer, and doing Islamic banking and finance wasn't really something that I had thought too much about. The first year of my 2-year trainee contract was actually with a provincial firm in a town named Tunbridge Wells in Kent. And when I was working there, I was doing things that were very far from city law, which was high street legal. So effectively acting on behalf of criminals and family law and prison law and all that kind of stuff. And it was really in that first year of that journey where I just literally joined my local provincial law firm in my hometown, where I started developing an interest in Islamic finance. And this was around the time when I was also thinking about, how would I buy a house myself when it came to that stage. And so I was developing my own sort of self-interest, and I was quite well connected to scholars in our local mosques at the time and helping, develop that side of sort of the community. And it was in that first year that I started reading about Islamic finance and what that looked like. It was in that context that I wrote in following an article from the Law Society Gazette, as it then was, where Norton Rose was effectively advertising its Islamic finance credentials in the Middle East. And a year into my training contract, I kind of thought, well, actually, that's an interesting thing, because on my own back, I had been writing to UK banks and building societies as a bit of a pet project, really, to tell them, about Islamic finance and how they might introduce products without having any knowledge about banking and finance. And then this article sort of came about where, this international law firm was talking about it. And I wrote into the chairman and said, look, this is who I am. I'm a year into my training contract. These are my interests. This is what I'm doing. And lo behold, before I knew it, I was called in for an interview and I transferred my training contract. I did my second of my 2 years with Norton Rose. And that was a real eye opener because I was no longer, I thought I was at the top of the world when I was doing what I was doing in that first year because I was going into the Royal Courts of Justice, serving writs of habeas corpus, which are, things that, you don't really do as a junior trainee. But I was with a firm that was quite prominent. So I was doing this high profile litigation. But then coming into a city law firm, it completely changed because my role now was to work on transactions, which I'd be reading about the next day, as a headline in a newspaper. And so real difference in terms of beginnings of my legal career, as it were.
Fantastic. And this was what, in the 90s or the early 2000s?
Now, if I admit the years, you'll know how old I am. But no, this is late 90s, early 2000s.
Okay, so this was like before like the age of like LinkedIn and internet age and things like that.
Not quite. I mean, I do remember when I started off, the internet was beginning to be a thing within the corporate world, and so emails were definitely a feature when I was at university. But in the workplace, I think had only really started properly when I started my training contract in the city. So, late 90s, early 2000s, I think that's when we started seeing, local area networks and computers sort of being patched together and, firms being organized in a more sort of IT literate way using the internet.
Fantastic. And speaking of the city, Muhammad, then after you finished your training contract, then you joined Norton Rose full time after that?
I did. So I joined the year that I mentioned. The second year of my training contract was with Norton Rose. I then qualified into the team that I was joining. So I literally joined because of that letter that I had written in. And the purpose was to join the Islamic finance asset finance team, and that's where I effectively qualified. And the formative years of my life, the first 5 years, 4 or 5 years, were actually spent in London working in that team. That was in itself was an interesting experience because to this day I kind of say to young students that you need a grounding in a financial center when it comes to professional services, whether that's accounting or law. I think being in a center where you're going to be exposed to different problems, different clients, is always going to give you an edge when it comes to your own grounding. And so I was in a team that was doing pretty much 80% conventional lease financing. This was when tax leasing was a thing in the UK, and 20%, Islamic financing. And this was before there were any changes in laws. And essentially over a period of 12 months, the practice just turned on its head. And I was the first sort of associate to join that practice with the partner who'd recently returned back from Bahrain. And we thought this was a strategic decision for the firm to be doing Islamic finance, and I was kind of part of that initial effort. And within that 12 months, it became 80% Islamic finance and 20% conventional finance, and shortly thereafter 100% Islamic finance. So I was in a very fortunate place that the industry was effectively developing. There were only two law firms in the city that were really focused on developing this expertise, and I was in one of them, which was great.
Fantastic. And then you transitioned to the Middle East within Norton Rose?
I did. So in 2004-5, I had a call from our head of banking, and he basically said, "Look, we think there's an opportunity for you to, having spent these years in London, for you to take that into our Bahrain office." And as is always the case with international law firms that have a network, people come and go, and it was the kind of right time where we had essentially moved the staff from our Bahrain office to set up our Dubai office. So there was a natural gap in the Bahrain office as they'd all could have moved on to the UAE. And so I was sort of brought in to continue the work that we'd been doing in Bahrain since the 1970s, which was focusing on the banks and clients in that market, as well as sort of Eastern province of Saudi Arabia. And so my practice kind of changed a little bit in that time because the nature of the work when you come to the Middle East is you become less generalist. So whereas in London I was very asset finance focused, so around aircraft, ships, real estate. In the Middle East, I had to become much more broader than that and become project finance focused because the region was looking at infrastructure development, and so you kind of had to do more in that project sort of finance space, particularly in Saudi Arabia and Eastern Province. Jubail and those kind of areas were coming up in terms of the petrochemical projects around about that time. And so you kind of had to learn a little bit more than just asset finance. But that grounding from London kind of allowed you to develop that expertise because you can always fall back on good hardcore legal training from a financial center and apply it into a different area. And so that's where I started doing, as I said, project finance, but also more broader. So, general lending, trade finance, and increasingly helping set up new entrants that were coming into Islamic finance became quite an important part of the practice, and to this day remains something that we are quite strong in because of that sort of London and Bahrain early days experience.
Great. And Mohammed, I think also you've said on other podcasts as well, and I think also in your background, you've also worked on the client side as well, right? Working for a bank.
Yeah, so that was the time when I was in Bahrain. So I was in Bahrain up until about 2010, 2011. And so Bahrain was home for us. My second child, Hannah, was born in Bahrain. And so, Alhamdulillah, she gives us a connection to Bahrain that we wouldn't have but for her birth there. So, when I was in Bahrain, and this was sort of towards the sort of 2006, 2007 sort of time, essentially at that time, I'd been doing Islamic finance now for, 7 or 8 years. And there was there was an interesting discussion happening within the industry, which was, have we got too skewed towards the debt side of Islamic finance? And what I mean by that is, we had, people like Iqbal Khan, who was the CEO of HSBC Amana, and others who were prominent, who'd been doing Islamic finance, for a few years longer than me. They had noticed this trend where effectively the industry was being led by debt, by the bankers, and we had neglected developing at the same pace the sort of equity part of Islamic finance. And those that are familiar with Islamic finance will be familiar that, essentially Islamic finance should be made up of both equity-based models of financing as well as debt-based models of financing, with the real ambition in an Islamic economy being around creating opportunities where there's proper risk sharing of profit and losses. And so ventures and private equity, were being talked about, in that sort of time in a way that they hadn't been discussed previously. And some of the industry leaders were saying we need to actually press a bit of a reset button to try and bring us back, maybe not bring us back, but at least introduce private equity and venture capital and the equity side of Islamic financing. And so I found myself in Bahrain working on the setup of Al Salam Bank, and we did the IPO. And essentially, as a senior sort of associate at the time, I got poached by the client. And the attraction for me was being, of course, part of a startup team of a bank. And to that date, I'd helped set up some of the UK banks as a consultant. For example, Islamic Bank of Britain was one of my projects, which is now Arayan UK. So it was interesting for me to be joining a management team where I was in the team setting up the bank. But what was more interesting was how the Bahraini banks were actually looking at Islamic finance. And you'll be familiar, Hassan, with some of the names like Gulf Finance House, R Capita, Investcorp. They would be set up as investment banks, but the purpose of the bank was not necessarily to do lending, although that was definitely a feature in those institutions. It was around creating private equity based or venture capital based opportunities, which would then be distributed to wealth management clients under sort of the assets under management model. And so for me, joining Al Salam Bank was really at a really interesting time in the industry where we were having these discussions around the need for Islamic finance to be both debt and equity, and a real desire on my part to try and learn about equity-based modes of financing, because I felt as a lawyer I needed to do that. If I was going to be committing to the Islamic finance industry, it shouldn't just be about the next murabaha or the next ijara transaction, but it should be learning about, well, how do I use mudaraba? How do I use musharaka? How do I use other alternatives forms of finance, and how do they fit into that equity mode? And Al Salam sort of gave me that training because, like those other banks, it was entering into a market which was all about creating prop book investments, using techniques which were Islamic, and then effectively making those available to wealth management clients. And it was a great time because if I imagine the golden days of London, and obviously we look back at these things through slightly rose-tinted glasses, but the early 2000s for me was very much the golden age of Islamic finance, in the UK, because we were creating something from a blank sheet of paper. I was a member of the Bank of England Committee on Islamic Finance, and we made all those changes in laws, which was great. But then coming to Bahrain, it was for me the golden era in Bahrain because I was learning about equity modes of financing and how you integrate them into this sort of Islamic finance ecosystem and sort of building out that skill set.
Great. Mohammed, before we start talking about Islamic finance in the UK, because I really want to pick your brain on that, just after As-Salam Bank, you went back to the law firm, right? That's what you're doing now day to day.
Yeah, so like most of us that have learnt or come through a risk-based background, we all have an insurance policy, and I suppose for me the insurance policy was when the global financial crisis hit. We kind of felt a dramatic change within the industry because we started then having those discussions around if a wholesale bank should actually be doing investment banking, or should the businesses be divided into two different organizations. And we've seen that in terms of some of the restructuring of large banks where they had to, post a global financial crisis, sort of restructure their organization. So around about that time, I think a lot of the Bahraini institutions, they were being asked by their board to think about what is it that they should be doing. And that's where banks like Al Salam at that time decided that they would go back into retail and wholesale banking domestically, and ease off on the sort of investment banking part of the offering. And as I mentioned, like most of us with a risk-based background, we have this insurance policy, this hedging policy, which in our case is to obviously return back to the law or return back to accounting if you're coming from one of the big four. And for me, it was always trying to take a step out of the law anyway to try and get this skill set before coming back. So probably happened a year or two earlier because of GFC, but I ended up going back into the legal market and taking those skills that I had learned on the equity side as well as the previous debt skills, and seeing what the opportunities would be for me to join a partnership. And interestingly, Norton Rose, as it was still then known as, before the combination with Fulbright and Jaworski, wasn't the first firm that I was going to rejoin. I'm not sure quite why that was the case, but my former managing partner discovered that I was doing this, and before I knew it, I had been enticed to return back to Norton Rose and take on the position as managing partner of the Bahrain office. And that kind of made sense for me because I'd lived in Bahrain for some time. My family was sort of growing in Bahrain, and maintaining those connections in Bahrain by running the legal practice made sense.
Great. And today you're the head of Middle East, right? And at the law firm Norton Rose.
Yeah, so I've been running the region sort of as the regional managing partner now for about 4 years. So that's kind of the current role. And since moving from Bahrain in 2010 to 2011, I moved across to Dubai, and I've been based in Dubai ever since. And the role is quite different to the role that I was describing to you earlier in those earlier heydays of building out this Islamic finance industry.
Exactly. Mohammed, you've talked a lot about Islamic finance at a high level, but I really want to zone in a bit on the UK. You've mentioned you were part of the Bank of England committee and that you were there in the early days of Islamic finance. I mean, if we look at it, Islamic finance, people can look at it historically. It started with Midghamar in Egypt, and it started with Dubai Islamic Bank in 1975, and then with HSBC Amana in the 1990s, and even before that, you'd had like rich individuals from the Gulf states or from Southeast Asia investing in London real estate or in London generally in the UK. But for me, Mohammed, like I guess it really for the UK probably really started with HSBC Amana, and then you had IBB, Islamic Bank of Britain, I think in the early 2000s, if I'm not mistaken. Um, could you walk us through like what the early days of Islamic finance looked like in the UK and say like the early 2000s?
So I was involved before those names. So going back a bit further. So for me, my first ever transaction was actually not with those institutions, but was with Arab Banking Corporation, which is now rebranded as Bank ABC, Bahraini, very, very well-known Bahraini bank with subsidiaries in different markets. And in this particular context, it had a subsidiary in London and still does. So around that time, we had subsidiaries of Middle Eastern banks, and AUB, Ahl United Bank is another example, although at the time I think it was known as the United Bank of Kuwait. They would all do real estate financing transactions. Typically, that was the only thing that was done, as well as taking bank deposits for, as you mentioned, wealthy individuals who had a particular need. And so my first transactions were probably prior to HSBC Amana and IBB and all of those things by some years. And it was in an environment where we would get a call from a client, such as Arab Banking Corporation. We would go down the road. This is obviously before Teams and Zoom. We would go down the road into their offices in Moorgate, and we would sit down and we would try to figure out what it is that the client is asking for. And we didn't have precedents. So, a client would say, well, I would like to purchase this property. How can I do it in an Islamic way? I don't want you to give me a loan. And at that time, we obviously were trying to create product. And why I consider that early stage in my life as the golden years is because we were part of a very small team of the bankers, the lawyers, and the accountants, and also the Sharia scholars trying to figure this out. And so, some of my best friendships are with scholars that I worked with some 20, 25 years ago. Sheikh Nidam Yakubi is a very good example of, one of the scholars at that bank who still is on that bank Sharia board, where we would actually sit around the room, scratch our heads and say, well, actually, we've got this mode of financing under fiqh. What does this look like? And we'd pull it apart. We'd look at the principles of fiqh and think about how we could make that work under English law. We'd then invariably get stuck by some sort of tax or construction related legal issue because you're buying and selling real estate. But we would come up with a solution. Now, and that solution, the first solution was actually the classic asset murabaha. And this was before tawarruk or commodity murabaha was even thought of. And it was buying and selling the real estate. And I remember my very first transaction was actually 147A Cromwell Road. It's interesting how the address of your first real estate financing transaction remains in your mind even to this day. But it remains in my mind because what we were doing is we're buying the real estate for the cost price and selling the real estate for the murabaha price. So effectively, the murabaha price was the amount paid to the seller plus the bank's interest equivalent as profit. And the reason why it's so interesting is because before the Bank of England work, there were no changes to stamp duty laws. So we had to do tax analysis back then on what does this look like? First of all, in the hands of the customer, are they able to get the right tax treatment, which effectively is to treat the profit as if it's an interest expense on their own financial statements? Can the bank treat it as loan and interest when there were no regulators who were thinking about Islamic finance? And more importantly, for real estate finance, if you're buying and selling the property, what does that mean for stamp duty? And in this case, and in these transactions, the sponsor actually took a view that they were paying stamp duty twice or on the Murabaha price, because we'd often use something known as a subsale exemption and effectively only pay stamp duty on one of the transfers, but that transfer would be at the higher price. And so this was a really interesting time for me because we were without precedents, we didn't have term sheets, we had a blank sheet of paper, and we were really rolling up our sleeves in the room with the scholars, who, frankly, it was their early days as well, where they were learning. And we can talk about that sort of whole scholarly process later on. But essentially, when you are learning fiqh, you are learning fiqh from the perspective of not contemporary issues, but effectively how did the classical scholars apply hadith of the Prophet in certain scenarios to the problems or the transactions that they were facing in their era. And so we were sitting with the scholars, effectively using those principles of building consensus and legal reasoning within fiqh to try and figure out how to do a murabaha. The same thing happened with the same client, in fact, on construction financing, where again we didn't have commodity murabaha. We had to ask ourselves, how do we do this using techniques which involve us getting involved in the actual underlying asset. So that's where istisna and parallel istisna came about, which are one of the two exemptions to forward sales under principles of fiqh. And we had to create a construct where the bank effectively stepped in between the owner of the property and the developer that was actually building out the site using a concept which, if you were to apply it in today's day and age, would raise all sorts of issues because a bank would be caught up in health and safety legislation, as well as those stamp duty laws that I've mentioned to you before. So it was a really interesting time. I mean, for us, those of us that were doing it back then, it was interesting because we were rolling up our sleeves, and to us this appeared normal. But nowadays, if you look at Islamic finance and associates coming through the legal profession, they don't have to do this. I mean, very, very rarely do you have to come up with a new product or a new solution. It does happen, but that tends to come to the senior members of the profession. But juniors, and I was literally 1 or 2 years qualified, don't end up doing that role. And I think that's a shame, but also a good example of how the industry has come along since then.
Yeah, speaking of the industry in more like recent times, Mohammed, when do you think the Bank of England and more mainstream people started taking notice of Islamic finance?
Yeah, so probably about 2 or 3 years after that transaction, and so this is the 2002, 2003, we started seeing London emerging. Dubai was being built. The DIFC was just a newly created offshore center, and prior to that, Bahrain was of course a center for the region. But London was emerging as a hub for Islamic finance because of practitioners such as at the time Dawny Day, who are now DD Cap, and others who had effectively got involved in aspects of the Islamic finance industry and were based in London, as well as asset managers and investment banks who were looking at transactions being based in London. So essentially, it was around that time of the early 2000s where this interest started developing with some of the senior bankers and professionals around, well, how can we put some structure around this? And in the world of sort of wholesale banking, there was actually much more flexibility because if you're doing cross-border financing, you're never really going to hit the same regulatory constraints that you have in a non-B2B environment when dealing with consumers. And so around that time, the bankers were engaged in doing transactions, but increasingly there was pressure and political pressure for the first time from grassroots, from people on the ground who were saying, look, you're doing all this great stuff, but what about the average family that looks at very basic needs in their life, which are how to save money and how to buy a house and the roof over their head. And it was around that time that there was real momentum gathering with within senior parts of the industry and within senior banking, where the effort was around, well, okay, if we want London to be a diverse and inclusive center for all types of finance and to attract as many different types of investment as we can, then let's try and unlock Islamic finance for everyday usage, as well as make the regulatory changes that are required to support the growth of banking and debt capital markets. And so I found myself in that context sitting on this Bank of England committee as the only lawyer, together with some of these senior bankers, being led by Andrew Buxton, who was the former CEO and then chairman of Barclays Bank, who had been approached by Gordon Brown, the then chancellor under a Labour government, to look into all of this because of this political pressure. And so there were conversations between the chancellor and the governor of the Bank of England. And Andrew Buxton was part of the Bank of England court and was asked to, set up this group. And I found myself doing a lot of media around this time, talking about Islamic finance on BBC and the Today program and other sort of news media as it was becoming more and more prevalent. And I got myself sort of co-opted onto that a group of about 6 or 7 people. And we essentially had a task ahead of us, which was to take all of the difficulties that we had experienced in our professional lives, and the Murabaha, double stamp duty, all of those things being one example, and to try and put in place legislation which the government was very keen to support. And I think that's the key whenever you want legislative changes and to open up markets. You need that political will on the part of the government to be pragmatic and to ask itself, what's the benefit to UK PLC in us being more open? And at that time, the government at the time was very much open for business and looking at trying to create ways to attract foreign direct investment into the UK from Islamic finance. And so we kind of created that enabling environment on the Bank of England committee. And that in itself led to a number of Middle Eastern sponsors saying, well, if this effort is successful, why don't we piggyback on it and look to create some of the first institutions? And so out of Bahrain, you then had the sponsor group behind Islamic Bank of Britain, now Al Rayan Bank. You then had HSBC Amana entering with their mortgage product. You then had United National Bank, Pakistani Bank entering with its products. You even had Lloyds and Scottish Widows introducing product. And those were all great and all on the back of that effort from the Bank of England committee.
And this is all pre-GFC, so before 2008, 2009, right?
This is all 2000 and up to 2004.
Right. So more than 2 decades ago, or yeah, about 2 decades ago.
Yeah.
And then, obviously, I think the landmark one was the launch of IBB, which is now Al Rayan UK. How significant was that, establishing a fully fledged retail Islamic bank in the UK for the first time?
Very significant, because it was the first time in any Western country you had regulators saying we would be happy to welcome an Islamic financial institution and we would regulate it on par with every other regulated financial institution. That hadn't been done before. And if we look at, how that's developed, we see that many European regulators and others around the world took inspiration from that bold step from the UK's regulator, the FSA at the time. We then saw those regulators with a similar standing to the FSA stand up and say, well, we think this is a good thing for our own economies. It's great for diversity and inclusion. It's great for bringing FDI in. And we've seen over the last 20 years, many different regulators copying that example to help facilitate growth in their own markets. So I think it was a pivotal moment, not only for the UK, because it obviously unlocked product for the first time in the UK market, but also the influence that it had then and to this day with global markets. And ultimately, that's something that London has always been known for. It's been known to be, like New York, a home for global finance. And what the UK did then under the government was to effectively demonstrate that, look, if we think this has got business sense and it makes sense for the economy, we're going to try and do whatever we can without diluting our systems to be an enabling environment. And that was an incredible time in history, I think, because of the influence that it gave others.
But Mohammed, you've talked about how the government and how it was they were laying the groundwork and putting the infrastructure, legal infrastructure in place. But if we look at it historically, Mohammed, like IBB, which was established in the early to mid 2000s, up until say 2014 when when Rayan from Qatar came in, it didn't really take off, really, did it, with the communities of Muslims, right?
Yeah, and I think there's a separation required in terms of analysis between creating that enabling environment and then can you create a viable business taking advantage of that enabling environment, which makes money. And ultimately, I think that's what it comes down to. I think one of the lessons that I've learned, and this is one of the reasons behind why I've become a fintech founder myself, and I'm sure we'll talk about some of that later, is because when you are a large minority in a non-Muslim country trying to operate a community-based business within a highly regulated environment, which banking is, it becomes very difficult with small balance sheets to make money for shareholders. And I think ultimately that's where institutional growth in the UK and Islamic Bank Britain is one example, but there are other examples that can also be given, which all have similar or have had similar problems. And that is, if you are trying to have a successful business and navigate an environment like the UK with a banking license, with all of the regulatory pressures and capital requirements, particularly post GFC, that were imposed through Basel II, Basel III, it becomes very difficult to use that sort of fractional reserve banking model with a small balance sheet, servicing a relatively small community, although a large minority, and to make money out of it. And I think that's probably been the downfall of most of the institutions that were born in that era, where they were not able to deliver shareholder value in the way that you would with a conventional institution of equal standing because of the constraints that are faced in building out the balance sheet. And so I think it has been a success story, but actually, have we grown in the way that we had envisaged? If I go back and look at my wish list item when I was working on setting up Islamic Bank of Britain and some of these other organizations, it's true to say, and I've said in other podcasts, that we had a different image in mind in what the industry and what the country would look like 10, 20 years later. And that certainly hasn't been, what was delivered. And it's now because of the changes in regulatory environment and a new wave of younger fintechs coming in, where I think the real opportunity for growth is coming from.
But Muhammad, again, like one of the things that just comes to my mind anecdotally is like when you speak to people, Muslims, about Islamic finance, a lot of them, especially the younger generation, get very skeptical. And there's that legacy of, scams that were done in the 1980s and 1990s in the north of England and in other places where, for example, you'd have someone in a mosque propagating a Hajj fund, and people on the lower end of society would put money into this Hajj fund. And then when it was time to actually go for Hajj, the people would just run off. And then when they went to the regulator said, oh, it's gone off. These guys weren't regulated. So there's that legacy with the older people. And then the people who are, millennials who have money and who are growing in affluence, a lot of them see Islamic finance, it's just a mimicking of the conventional and just paying a premium. And then you have this younger generation of Gen Z who are on TikTok and social media who have this idealistic version and who don't have money. I mean, people like Muhammad Amin have talked about this. There's three different kind of Muslim consumers: the ones who are extremely religiously devout and willing to pay over the odds for a product, the ones who are skeptical, and the ones that don't have money. I mean, what do you think about these kind of things?
So I think we need to lead with core Islamic principles. And I think if we are to take a lesson over the last sort of 20, 25 years, and let's call Islamic finance version one, that's happened to date, and version two is kind of happening now, I suppose. I think what we have to do is ask ourselves, well, how was that sort of experience for those different segments? And, I think it's fair to say that what happened in the UK and certainly in other markets was trying to mimic the equivalent conventional product in an environment where, as I've mentioned, regulation was the same. and balance sheets certainly were not the same. So cost of funding issues arose, which is why the premium question has arisen. But ultimately, when one's sitting in a mosque or one sitting down with, your friends having a coffee or chai or whatever you're doing, and you're talking about investment and Islamic, equivalents, you're going to be saying, well, it's just the same as a savings account on the high street, or this mortgage product costs more. And I think the issue is that people don't generally understand the nuances behind why it's more money, because they don't obviously understand banking, and why would they? And they also don't understand why, if a Islamic institution is trying to follow its conventional counterparts, why it will benchmark its rate of return to the same rate that the high street is paying. These are not things that necessarily will be connected. So I think it's now really the case of going back to those basic Islamic principles and asking in version 2, do we follow that, or do we come up with something slightly different?
So, Mohammed, like, how do you respond to these criticisms of Islamic finance or Islamic banking in the UK?
Yeah, so version 2, which is what we're seeing at the moment, I think is where people see the problems within Islamic finance and how it's developed in the UK over the last sort of 20 odd years, and that it really hasn't served the interests of everyday consumers. And so version 2 that is sort of happening at the moment is all about returning back to those core Islamic principles of what, should be of service to communities, rather than trying to mimic the same product that's existed within banking, because that model just hasn't worked. We've seen that hasn't worked. It doesn't make enough money when you've got small balance sheets, or if it does, it takes a very long time for shareholder value to be delivered. Whereas the new environment that we work in is kind of posing a slightly different question, which is to provide solutions within Islamic finance. Is there a different regulatory approach that can be adopted? Do you have to be a bank to give product? And the thinking from some of the new businesses is, well, you can give regulated product, but you don't necessarily have to have a banking license in order to do that. And therefore, you don't have all the capital constraints and the regulatory red tape and the fractional reserve banking system, etc., to deal with in a non-bank financial institution context. And when you find that you've got yourself, when you find that you've got a freer hand to be creative, what you can then do is break down, well, what is it that actually people need? And you can become much more innovative to those core Islamic finance principles. And that's why, for example, home finance, if we take that as an example, we've got one or two financial institutions that still offer that product in the UK on a very limited basis. But we have more non-bank financial institutions, some of whom are regulated, others are unregulated providers, who have got different types of products, which are structured in a slightly different way, where you can demonstrate to a consumer that they've got additional choice. And it's not necessarily just about that premium that was being charged on the high street. Similarly, with investments, you've got fintech platforms that have said, well, what's the other need that people have? It's, yes, the roof over their head, but also to save for the rainy day. You've got alternatives which are looking at core principles, which is how can you distribute more of the upside to the investor, rather than forcing investors into this sort of model, which requires, bank management and shareholders to of course receive shareholder value. And when it comes to attracting deposits and those kinds of things, not necessarily thinking about distribution of upside in the way that a mudaraba or musharaka construct would. So you've got kind of these new ways of thinking, which I describe as going back to core Islamic principles, which we can use the new sort of regulatory environment that we have with fintechs to try and deliver different types of solutions. And I think that's the change that we're seeing certainly in the UK, in Malaysia, in other parts of Europe at the moment, particularly in the Middle East as well, where there's a growing fintech market as well, where we can offer product, but in a slightly more agile and a different context. And the challenge with these businesses will always be consumer protection, and hence why I think the market does need to be regulated still. Because ultimately, as you said in one of your earlier examples from the 1980s, it takes one rogue player to then spoil it for everyone else. And regulatory standards are so important to ensure market confidence remains and consumers' rights remain protected.
Yeah, I think that legacy thing will be very difficult to change with the older generation and the middle generation, but like maybe with the younger ones, it could be changed. But one thing I wanted to ask you, Mohammed, just sticking on the UK Islamic finance.
Hassan, I think you have to change it through the quality of the offering. I think one of the things that we often talk about is the need for education. And I think the way that you do it is to actually show that Islamic principles are all about trying to divide the upside in a more equitable manner rather than it being the way in which conventional banking operates. And I think if you go to skeptical people who perhaps have had bad experiences, I think the way that you win the hearts and minds is actually to deliver and build trust. So if you've got, for example, an investor that sees a Mudaraba or Wakala savings account, and again, we're talking about retail examples here, and they're earning 3.5 or 4%, and they go to Abbey National. Well, it's not Abbey National now, is it? Tells you my age. It's Santander, isn't it? Or Barclays or HSBC. And they offer the same product at the same interest rate. You're naturally going to say, well, what's the difference? Because I'm just being benchmarked. They're not going to understand how the underlying product is different. They're going to just look at the economics that they're going to get out of it. But if you can approach that conversation and say, yes, you can take that product which mimics the high street. What about a proposition where you are investing your hard-earned money, but you're actually taking the lion's share of the upside rather than it going into the banking model, which you don't trust anymore? And that's a core Islamic principle. If you start doing that and redressing the balance through examples and people see it in their pocket, then they're more inclined to say, well, actually, I understand the benefits of Islamic finance because I can see the difference. Until we do more of that and build the trust through products and actually people getting wealthier and more financially inclusive, I think it will be very difficult. Obviously, the younger generation, as you've identified, are very tech savvy. They're in a different space. But the elder, community and that middle level that you described has to be through positive change by way of positive experiences to undo those negative experiences.
Yeah, I was just going to say, like, I think part of the puzzle here, part of the problem is that you're not explaining to people that Islamic finance technically is supposed to be a more or alternative economic model where it's based on profit and loss and risk sharing. Whereas if you're telling somebody, okay, I'm going to put money into an Islamic bank on a mudaraba basis, and you could lose principal and then some, I'm not sure if people's risk appetite would be favorable to that in a real life setting.
Yeah, but I think that's where there's a role for education and there's a role for a variety of products, but there's also a role for product providers to say, I'm making this much money out of this product, and it may not be Mudaraba or Musharaka, but you can introduce, I think, the essence of those forms of financing of Mudaraba and Musharaka and say, those are all designed to ensure that there's redistribution of wealth on a more equitable basis. So rather than entering into a Mudaraba savings account where there might be an 80-20 split of profit share, the customer getting 20 and the bank getting 80, for example, why don't we split whatever we make on a 50-50 basis? Or why don't we give you the 80 and keep the 20 for ourselves? I think those challenges that we have in the UK and elsewhere in implementing Mudaraba and Musharaka from a regulatory point of view will always be there because they are true profit and loss sharing accounts. But I think the essence of those products can be replicated with other products which are more acceptable from a regulatory perspective and certainly more acceptable to consumers from a risk perspective.
Isn't it also that it's just down to human psychology, right? People want to share the downside risk, but not the upside risk when things.
Absolutely, and that's why I think education is a huge component of all of this. And the current sort of version 2 is all about, as you mentioned, TikTok and social media and putting out reels, and that's been really good. And obviously, it'll help the current generation and those afterwards. But we can't ignore those that are sort of behind them.
Notwithstanding, like, all this stuff that we're talking about, there's also been a lot of stuff that's happened in the UK, right? Well, obviously, we had Brexit in 2016. We had a pandemic in 2020, which arguably is still the ramifications are still happening today. Islamic finance globally, I would say it's slowed down a bit, although, there's been a proliferation of sukuk issuances. We can talk about that. But the last 10 years, Mohammed, it seems to me that a lot of the Islamic banks in the UK are either withdrawing or like really scaling down their products. Do you like you've talked about fintech, but do you see like a return to the old golden days of where you see like all these Islamic banks from say the UAE or Saudi or Malaysia coming back?
I don't, because I don't think it's needed. I think the point that I was making earlier is that if you have a small community, and again, we're talking about consumer, it's a different answer if you're talking about investment banking. But if you're talking about those high street banks that were set up, will organizations like that return? I don't think they will, because I think the regulatory landscape and the consumer demand, and therefore the business models, have all shifted. And you don't need to be a bank to offer product anymore. You don't need a deposit taking license to roll out the products that individual consumers in a minority community need. Yes, there are advantages to that in terms of deposit protection schemes and that kind of thing. But equally, the new sort of regulatory environment means that if you are creative enough, you can create more choice and create more product opportunities without having to set up a bank. And I think what we'll see are these new businesses that are growing their product portfolios with a much more efficient operating model, which efficient meaning that the costs associated with customer capture all the way through to processing in the middle office and back office, they will be at a completely different level because they are true fintechs embracing technology. They will offer a compelling risk reward story for consumers, but they'll also offer a compelling opportunity when the critical mass is there for investors. And I think what we'll see are Middle Eastern banks who are looking to grow out their groups or inorganically, looking at some of these more sophisticated institutions on a trade sale, because it effectively gives them a step up in a market that they don't have any share of, in a model which is different to their traditional banking model, and they'll see the difference in terms of return on investment immediately because of the efficiency that the model brings them. So yes, I think we'll see investment definitely coming from the Middle East, but I don't think we'll see the high street names appearing in the way that we saw in the early 2000s, not least because the high street has also changed. I mean, we look at all of the main banks closing down branches. The way that financial services are being distributed has also shifted. So it just doesn't make sense to go back to that.
As we bring the podcast to a close shortly, Mohammed, there's just two areas I wanted to ask you. The first is like we've talked a lot about retail, and you've also touched on the institutional and the more larger scale. With the new UK government in place and all the stuff that's happened over the past 10 years in the Islamic finance industry in the UK and globally as well, do you think that the UK has a positive place for things like foreign direct investment, sukuk issuance, and Islamic activities on the corporate and institutional level?
Yes and no. It's a bit stale, Hassan, to be honest with you. The current sort of equivalent to the Bank of England committee is a working group that I sit on with Treasury and other stakeholders. And I think one of the things that we really need to do is get the attention of this government to sort of accept that in a post-Brexit environment, FDI from the Middle East and from Islamic investors is something that's going to be a good contributor to UK PLC. And if someone in government is listening and accepts that premise, then it makes sense to renew the laws that were now put in place over 20 years ago for Islamic finance to make sure that they're still fit for purpose, because there are quite a few laws which are still pointing towards that sort of old-fashioned banking industry, which we've discussed a few times in this podcast, just doesn't work in the current age. And if the UK wants to remain at the forefront of fintech, it's going to have to try and overhaul some of those laws to make sure that things like sukuk, capital markets, growth in areas, for investment are all going to remove that friction for Islamic investors. And so there is some work to be done, but I think there is an opportunity there.
And Mohammed, you talked about fintech and how it can serve, but I want to just push back a little bit in the sense that, ever since interest rates globally have gone up since 2022, we've seen a slowdown in venture capital deal making. A lot of VCs are, stuck in a lot of bad positions financially wise. And even like you could argue that Islamic fintechs in the UK, you've seen like a decline in some of them, although there are some still around which were, which began during the pandemic. But like, do you not think that some of these fintechs, they're just offering very vanilla products? They're not offering things like takaful or car financing or more sophisticated products that people actually need and want?
Completely agree with that, Hassan. I mean, I think you've got the same, growing pains in that industry as any other industry, which is there's a bit of a bandwagon moment, isn't there, where people think they've got a great idea, but you've got to use sort of, slightly capitalist way of thinking here, in that, the good opportunities will remain and the bad opportunities will fizzle out. And unfortunately, there are quite a few that are set up by sponsors who perhaps haven't had life experience and they have a good idea and they kind of want to breathe life into it, but unfortunately it hasn't gone anywhere. Some of the neobanks, for example, Islamic digital banks, we could probably refer to 2 or 3 examples that began before COVID, and many of them just don't exist anymore. And you've got to ask yourself, well, is that a good idea? And if someone's coming to market with a product, is there a gap for that? What's the feasibility study like for that? Am I actually genuinely giving something to this industry that it doesn't have? And if I am, do I have the right skills to be able to deliver that? There's no point someone with a marketing background setting up a fintech that's all about financial services when they don't have any experience on financial services. So I think there are challenges, Hassan, but I think the market dynamics will also ease out some of those opportunities that just don't make sense, and they will drop. But that's no different to any other industry, in my view.
And Mohammed, you've set up Nesta. Well, maybe you could tell our listeners what is Nesta and what does it do?
Yeah, so I set up Nesta. I'm one of the 2 co-founders of Nesta, which is a UK FCA regulated non-bank financial institution, Islamic financial institution. And someone once said that the businesses that do well are the ones that are sort of serving one of the needs of the founding shareholders. And for me, it was very much out of frustration that, having been in employment for 20 odd years at that point, I still was not finding product to invest into, other than putting money into mutual funds. And if I had enough money into a sukuk, there wasn't really much available for investing into fixed income product. And so myself and my co-founder, who's a banker, Yunus Abidu, we thought, well, look, we're our first customers. We need to invest, but we don't have anything to invest into that has a risk-adjusted position for us that we're comfortable with. How do we go about trying to create something for ourselves and also the industry, recognizing all the points that we've discussed earlier about banks really not being able to create products for the reasons that we've discussed? And what we came up with was, well, why don't we play to our strengths? Why don't we create our first product around real estate financing using established techniques of senior secured lending, where you provide financing into commercial SME, so you're supporting the backbone of the economy, and that was a great decision for the first product, and essentially then democratizing that financing into an ISA wrapped product for everyday investors, whether Muslim or non-Muslim consumers, to buy. And so that's kind of what we do. We provide a product that banks have given to the market for centuries, which is to provide property-backed financing. But what we then do is we break up that financial asset into £1,000 tranches, and you can go onto the app, onto the website, and you can invest, and you'll get your portion of the underlying return. And it comes back to the example that I gave to you earlier, which is, if you bring the essence of Islamic principles into your business, you don't necessarily need to be doing mudaraba or musharaka, which obviously continue to have regulatory constraints. You can offer your product with a debt model such as diminishing musharaka or murabaha, but you can pass on the essence of those Islamic core principles in your business model. And so what we've done is we've built the essence of mudaraba into the business model by effectively resetting that balance between the business and the investor, by saying that the investor takes the lion's share of the upside. And so in my earlier example, where the bank might keep most of the return, most of the return is passed on to the investor, with about only sort of 20-25% kept by Nesta itself. And as a consequence, you kind of, as an individual, you can build your own fixed income portfolio, and control your investment. So it's a niche product, but it's a product that kind of addresses that other need that I mentioned earlier, which is how do we save money? And so it targets not only retail customers, but family offices, high net worth individuals, and increasingly institutions who have got assets under management to deploy into private credit.
And Mohammed, what's it like running a fintech? You've been in the law firm, you've worked at a bank. What's it like transitioning into a more tech savvy business?
So look, I'm not in the day-to-day management of Nesta. I'm a director. I'm a co-founder. We've got about 20 people on the ground in London, so there's a proper infrastructure there. But as you will know, Hassan, when you start off these businesses, and I started this some 6 years ago, so it's been a while. You do have to roll up your sleeves, and the very first thing that we had to do was decide how we're going to build the tech stack. And when I was at Al Salam Bank, I was interviewing candidates for delivering core banking solution products, and that was interesting because as part of the setup team in that bank, I'd never had experience in buying a core banking system, let alone any IT system. And now with Nesta, I was looking at those same issues and asking, well, do we build this ourselves, or do we import the tech stack from a third-party solution provider and never have the IP over it? And we kind of took some very brave decisions in those early days to spend time developing an Islamic platform. And that could be a software as a service down the road, but it's essentially enabled us to be very agile and to now talk to third parties about white labeling the product. So tech has been an incredibly interesting aspect, but I've always been interested in tech. I'm a gadget man by nature, so it hasn't really fazed me too much. Other than, of course, you get sort of stretched in terms of your knowledge. You always have to be learning something new.
That's fair enough. Mohammed, you've mentioned like Nesta, but tell us some current or upcoming projects you may be working on.
Yeah, so I mean, wearing the NRF hat, there's quite a few interesting things that we're doing within global trade finance, trying to help new entrants coming into product, helping asset managers sort of create liquidity from different markets using things that haven't been done before within within the sort of whole finance ecosystem of trade finance in particular. So there's a lot going on in terms of new products, which I can't get into any specific details. But at the moment, I'm 3 months away from my finals, which are the finals for my Alamiya program. And so 9 years ago, this is more of a personal anecdote, I suppose. 9 years ago, I decided that I was going to go through a classical, Sharia scholar, course, a program, very similar to the program that classical scholars go through, but it's taken me a lot longer because it's part-time. And so I'm sort of 3 months away from qualifying under that program. And so quite intensive work at the moment to finish the course off. But I suppose the next thing for me is going to be how can I apply that Sharia law qualification within the legal environment, and what does that look like? I have to say I haven't quite got to the position of thinking about that. Haven't certainly talked about it to the scholars, but I will probably need to, after I finish the course, discuss with them how I can ultimately become a better lawyer, a better solution provider by using that skill set. And so that's kind of the next stage, I think, for me in the personal challenge, to try and figure that out and see how that can add additional skills to what I already do.
Fantastic. And Mohammed, what's the best way for people to reach you? And are you active on social media?
I'm active on social media. I'm on LinkedIn, in particular, is the main social media that I use. But I receive emails all the time. I'm available on the Norton Rose Fulbright website, so you can drop me a line through there. I may not get back to you immediately if you've got a request for a call, but I will get back to you. I try to allocate time so that I can help, in particular, young aspiring lawyers who are coming up through the ranks. It's important for us, if Allah has given us some skills and abilities, to try and help those that are coming up by mentoring them. And that's something that I would encourage anyone listening to this podcast to maintain throughout their career. Give time back. So, we'll find the time to speak. Hopefully I don't get inundated, but do feel free to reach out. And it's always good to build that network and to connect.
Of course, and I'll also put in a link to Nesta as well so people can find out more about that. But Mohammed
Sure.
Parak, I wish you all the best on your studies and yeah, going into 25 as well. I hope you have a good year ahead.
Thank you, Hassan. And thanks for inviting me.